welcome to our edition of Meet the Lender. And this time around, I'm delighted that we're going to be joined by Samuel Debenham, who is Regional Manager at Paragon Bank. Now, for those of you who haven't come across Paragon Bank before, Paragon are a specialist lender who we at MFB use all of the time, largely because of their absolutely incredible lending criteria. And also they have some very good rates as well. So they sort of tick all of the boxes. Now, a brief bit of background on Paragon and who they are. They're a specialist lender and also a savings bank. They're part of a FTSE 250 company and founded in 1985. So as well as doing mortgages, which they are truly fantastic at, they also offer commercial loans and savings products as well. Now, in terms of the mortgage side of things, which is what we're obviously going to talk about today, at MFB, we tend to use Paragon a lot for many things, actually, but where they are particularly seem to excel is limited company lending, HMOs and multi-units, and they can lend on HMOs of up to 20 rooms and multi-units of up to 20 self-contained units. For limited companies, they can do layered companies, so a company owned by a company owned by individuals. They can do day one remortgages. They're also very good at lending on slightly quirkier property types and lots of other great stuff. So Sam's going to explain this all when we get into the kind of content of the interview, the session. But like I say, we're a really big fan of Paragon here at MFB. Sam, thank you so much for joining me today and taking part in our Meet the Lender sessions. As you know, I've got 6 questions for you that we're going to ask all the lenders, so you have the same kind of crack at the whip. So we're going to kick things off today by first of all asking you, who would be a typical borrower for Paragon?
I'd say there is a big range. There probably isn't a customer that we don't see. That can range right from a first-time landlord who is at the very beginning of their investment journey, right through to, I guess, the journey of that really, where they then, make money, enjoy it, want to buy more. We support them with that, right through to your full-time landlords with, that is their day-to-day business. That is their sole source of income, and supporting them with maintaining their portfolio and growing their portfolio where they see fit. So I'd say a big range is probably the best way to answer that.
Okay, I mean, that's a really good answer. And I think we've seen that in terms of our experience with you guys. So you support the first time landlord, and we've also got clients that we brought to you who have like hundreds and hundreds of properties. So yes, you don't have a typical borrower per se.
Yeah, big range for sure.
Big range. Okay, thank you. Question number 2. What would you say are Paragon's strengths in terms of lending policy?
I think that, as a lender that has been in the buy-to-let space for as long as buy-to-let has been buy-to-let, over the years we have picked up an awful lot of experience in terms of our model and how we work and ultimately how we support landlords. I would say the way that we look at, in particular with limited company lending and the kind of nuances that sit behind that, and the things such as different types of deposit types, more complex structures, and the weird and wonderful ways that landlords are looking to shape their business and shape the structure of their business, and ultimately assisting with that and finding solutions for those types of examples. Non-applicant shareholders for those landlords that are really having those conversations around their IHT planning and what the future looks like for their business. So I think we have a really good and detailed understanding of how we lend to limited company lending and what that needs to look like in terms of the landscape. If you look at your kind of more professional landlords or full-time landlords, one thing that is often a sticking point through conversations that I've had with brokers over the years is many of our competitors will do things like background stress testing that will ultimately determine whether they lend or whether they don't lend. We have a much more common sense approach, in the sense of we will review all portfolios on a case by case basis, and if it makes sense, if the cash flow is healthy, if the performance is healthy and the assets are good quality, why would we not want to lend to a landlord with that much experience? I think in addition to that, you've got the retention piece, so customers can come to us and they can stay with us. We work very hard, just as you guys at MFB do, to hopefully attract customers to come to Paragon. Well, we hopefully want to give them reasons to stay here. So with product transfers, further advances, really ultimately trying to give them everything we can in terms of continued customer service to continue the servicing of their loans. And I think if you look at other pieces, we can look at forward funding facilities for your portfolio landlords to aid their growth, where they may have a war chest, they may be looking to go to market and add stock to their portfolio quite quickly. We can provide a facility that's really going to simplify the application process to help them facilitate that. And things like we've got refurb to lets to help those landlords that are trying to sort of target those assets in need of some kind of light refurb, whether it's conversion to HMO or more cosmetic upgrading. So I think we have a policy that's very driven around that arena. And I think above all, as a bank, we do have the ability to make common sense decisions. So whilst we do have guidelines that say we do this and we don't do that as a preference, as you know from the experience over your experience over the years, we are willing to have conversations. And if there may be something that doesn't quite fit the mold of what we want, but if there's an applicant that we want to lend to and an asset we want to lend on, then we do have the ability to find solutions for the right cases. So I think for me, that's probably one of our strongest areas. And then the only other two are HMOs and multi-units, which without doubt are two strong areas of ours as well in terms of security types. And a growing market as well in both cases.
Very good. And I actually think everything you said, though, I absolutely agree with, having worked with you guys very closely over the years. One thing you did mention there, which I think some people's ears will prick up on when they hear you say it, is the forward funding facility. What actually is that?
Well, I think the idea is more often than not, it will be for a customer, an existing customer of ours. The concept of it is that we would ask the customer for a business plan via yourselves. We can look at a facility of up to £2 million. The idea is that we already have traction with that customer. We already have an understanding of them and their business and their model and how they run things. So really, the business plan is designed to tell us what their plans are moving forwards. How many assets are they looking to buy? Which area are they looking to invest in? What type of properties? What value of assets are they targeting? And the idea is that if we can get to a point where we go, well, we like the business, we like you as landlords, we like what you're doing, we will support that. We would then offer a facility letter of up to £2 million that will then enable them to go to market with effectively a war chest, knowing that that level of lending is already pre-agreed. The idea being is that a week after it's agreed, they go to market, they find an asset they like, they get offer agreed. You guys would put the application through knowing that from an underwriting perspective, we've got what we need. We've asked the questions we need to ask. We're happy with what we're being asked to do. So subject to the valuation going through as expected, you're going to get your mortgage offer relatively pain-free. So relatively pain-free, it's going to be agreed subject to valuation. So from an application process, it's going to be very, very straightforward and much more streamlined. So yeah, it's a popular choice for those landlords that are looking to add stock quite quickly, and it can act as a really, really useful tool to help them facilitate that.
Yeah, and that's definitely a unique offering to Paragon. So we've got quite a few clients taking advantage of that, and I found that really, really useful, particularly from a kind of expediency sake when they're negotiating on price when they're trying to purchase something. So it's a nice thing to have in your pocket. But as well as being an amazing lender who does loads of great things, you do still decline applications occasionally, some of mine. What's the main reasons? What are the biggest challenges that you're finding with applications? Where do things tend to fall down when people are coming to Paragon, do you think?
There are lots of reasons as to why an application can fall down. I think in terms of probably one that I see more frequently would be asset related. So why is that? I guess, from our perspective, fundamentally, there's two main driving areas behind whether we want to lend or not. One area is the applicant. Do we like the landlord? Do we like their business? Do we believe in their ability to manage the portfolio effectively? And do we believe affordability is likely to pose as an issue in the future? And then the other is the asset. Do we believe that there's a continued demand for people to live there on an AST basis or on a rental demand basis? And do we believe there's any issues there around future resaleability? So I guess asset would be one that I would focus on, whether that be around the location, i.e. what it's above, what it's next to, what it's opposite, what it's around the corner from, the overall area. Is it an area that is experiencing some kind of downturn in the market where there's plenty of supply within rental stock, but the demand just isn't quite there? So naturally, the landlord may find it more difficult to rent out. If you are in an area where it perhaps isn't as desirable, where the demand isn't as strong for tenants or across tenants, if you then have a property which is particularly small, like a studio flat, again, naturally, we're going to look at that and think, well, actually, the demand here for tenants is potentially going to be very limited as a result of that. Could be more condition driven, i.e., if we are remortgaging asset, we have an expectation that landlords are carrying out regular maintenance checks. They are doing what they need to do to continue or maintain the quality of that property to ensure they're providing a nice home for people to live in. So naturally, we expect them to be very responsive when dealing with problems and rectifying any issues that property may face over the coming months and years. So, if we are being asked to remortgaging asset and actually the fixtures and fittings are very dated, there's problems with damp, there's problem with mold, whatever, then clearly we're going to have a hesitancy to lend. But I think what we do, and in my opinion, what we do very well is we do have a process in which we can check assets up front. So, from a broker's perspective, like yourselves, from an applicant's perspective, look, we all accept that we live in a world or we work in a world where there are no's from time to time, where things don't work, deals do not work, they fall apart. And I guess the thing that we always prefer and look for is early no's, and that's a way that we can manage that, where if we do have a concern around the asset and the security or the location of it or the condition of it, the construction of it, whatever, between us as the sales team, we can check any of those issues up front, get them referred to our team of surveyors that work for us in-house. They can come back to us within a day or two and really give us a good steer on whether it's likely to be something we want to lend on or not. And really try and give you as much reassurance as we can. So yeah.
It is good, actually. We've used that quite a few times with you, and it's just kind of headed off any issues at the outset. And the other thing, I suppose, with Paragon, which is absolutely worth mentioning, is your valuations are free, aren't they?
Yeah, they are. And I think just going back to what you just said there, I know we've done plenty for you over the years. And for me, it's a no-brainer. I used to be a broker in my previous days before Paragon. And one thing that used to really frustrate me is you would talk to a lender about an asset to sort of get an idea of whether the location of it's likely to be a problem. And you're told that subject to valuer's comments, they'll look at it. But in reality, what does that actually mean? Because in essence, everything is subject to valuer's comments. Yeah. So by us providing that service where we can actually get it in front of the right people up front to get a good steer on, are we going to lend or not? It's not guaranteed, it's not binding, but we're going to give you a good steer on whether it's likely to be something we'd look to lend on or not. So yeah, absolutely. And yeah, free valuations throughout.
Which always helps. And I think one of the things actually that's just worth mentioning about you guys is the fact that your valuations are generally done by people that are in Paragon people, aren't they? They're Paragon staff, is that correct?
Yes, so we have a team of surveyors that cover the whole of the UK. So yeah, they do a majority of our valuations. Typically, probably the more complex assets, such as your HMOs, your multi-unit blocks, perhaps your higher value assets. And depending on availability and the location, we would then look to panel out where needs be. But yeah, correct. We do have our own surveyors that work solely for Paragon and value solely for Paragon as well.
Yeah, and I think that really comes into its own, because if we refer a property to you up front, that particular valuer who's going to be going out to see it actually is the one looking at it saying, yeah, this looks okay on the face of it at least. So you don't then get someone else actually go and visit the property and then decline it because it's opposite a, I don't know, pub or something. So it gets real consistency.
Absolutely, it's consistency, and that ultimately is what we're all looking for.
Absolutely. Okay, so my next question is, how can applicants ensure a quick and smooth process when applying for a mortgage with you guys?
Yeah, I think in terms of the application process and the application journey, we've been on a big journey ourselves in the last 12 months, and obviously MFB have been a big part of that, which is always appreciated. We've invested in a new origination system that we are still in the process of launching and getting to grips with. And the big focus there is really on trying to streamline the application process and really trying to make it as easy and as straightforward and as simple as possible to do business with us. And really the emphasis there is trying to streamline the application process. And really, I suppose there's things like, what the system has now in terms of the origination platform is it has a lot more information, it has a lot more intelligence in terms of third-party information. So when you guys place business with us, we know an awful lot more about the application and the applicant. And this gives us the ability to refer situations if we need to. So if we want to have a closer look at it and get it in front of an underwriter before we go to full application, just to get, again, a good steer on whether it's likely to be something we can work with or not, it gives us the ability to do that. Equally, once an application goes in, the system is intelligent enough to pick up on the type of application it is, and will then tailor the requirements we have accordingly. So really, to ensure that we're only asking you for what we need to decide whether we can or can't lend as a result. Something that we've rolled out very recently is a way in which we're able to digitally verify documents. So ultimately putting the trust into the system, identifying cases which are viewed as more straightforward, more simple, and ultimately trusting the information that we have access to allow those applications to go through without, well, with as few touch points as possible. So only asking for things where we absolutely need it, and really trying to drive that case through to an end outcome as efficiently as possible. So yeah, we are on that journey at the moment. And I think from brokers' perspective, you know, I guess the classic is just, you know, the quicker you can give us what we need, the quicker we can obviously drive things to outcomes. We instruct valuations day one, which always helps. And I think from an underwriting perspective, we often deal with quite, as you guys do, we often deal with quite niche, quite complex situations that sometimes just need a little bit more context, that might just need more of an explanation. The more information you can give us, the better, the quicker we can get to grips with what's going on, tailor our requirements accordingly, and hopefully drive it to a positive outcome as quickly as possible.
Fabulous. And actually, when we were chatting previously, you said something that I thought was absolutely brilliant. And actually, I wish more lenders kind of took a view on, is that we were discussing about the kind of application process. And you said the kind of the whole kind of thought process has now changed. Whereas before it was down to the broker and the client to ensure they had everything for the application. Now what Paragon are doing is really turning on its head and saying, what can we do to make sure that we have to ask for as little as possible, and to put the onus on yourselves as a lender to try and garner the information where you possibly can, which is a real U-turn in terms of the approach of lenders in terms of the underwriting process. I think that's really fantastic.
I think that, you know, there's always been that perception that, well, not perception, but like, you know, we want to make our lives as easy as they can be as possible. You know, we want to have as few touch points as possible, and ultimately drive cases to offer for, you know, for the customer's benefit, for our benefit, and for your benefit. But, you know, I think with AI and with all the other things that we have access to, you know, this new system that we've invested in is far more intelligent than what we've had before, and naturally we have access to a lot more information about the proposal. It's not like we're saying that with these simple, straightforward cases we now don't care about the information. We absolutely do. It's just that we have access to it already, and therefore we don't necessarily always need you to give it to us as well. So I guess it's from our perspective utilizing that, taking advantage of that, to ultimately really trying to enhance and help the customer journey by processing quicker. And ultimately that allows, from a resource perspective, our underwriters to do what they're best at, which is ultimately focusing on the more complex scenarios that we're often asked to get involved in as well. So yeah.
Great. Question number 5, you're nearly there, Sam. Do you think the upcoming changes in legislation, particularly keeping in mind the Renters' Rights Bill, will impact how Paragon lend at all?
I think from our perspective, I don't think there's any immediate panic or feelings that we need to change the way we lend or policy. I think if you go back, certainly over the last few years, you know, affordability checks via stress testing has been a thing. You know, we are stress testing for that reason. If things become more difficult, what would things look like as a result? I think with, you know, the way that we lend, we do perhaps at times ask more questions than some, particularly where we might be lending to a full-time landlord. There is always onus on and rightly so, there is always an onus on the business and understanding the business, the management of that portfolio, the current performance of that portfolio. What does cash flow look like? What do cash reserves look like? We are looking at those types of situations where if things were to become more difficult, linking this back to renters' rights bill, if you were to be in a situation where a tenant wasn't paying and, there was a 6-month period in which they were there not paying and therefore the asset isn't producing income, that the portfolio is still going to be okay despite that. So, yeah, I guess, look, it's a watch this space. It's not there yet. I think, where we might be in a year's time, who knows? But I think the immediate feeling is that there's no immediate panic. There's no reason to sort of change the way we're lending at the moment, but who knows?
Yeah, I think one of the most asked questions that I get from clients at the moment is with the abolishment of ASTs. Is that going to change the way lenders lend? And I get the sense, speaking to, and obviously this is all about Paragon today, but yourselves and other lenders, is it's like, actually we don't see it as a massive, we can't see things changing on the back of that, because we don't actually particularly expect tenant behaviour to change, because tenants actually want to be in homes for long periods of time and not changing every couple of months. Therefore, losing a 6-month AST or the ability to go earlier shouldn't really change tenant behaviour. I don't know if that's kind of where you guys sit on
Yeah,
that.
I agree. I think that, we, like I mentioned about cash reserves and cash flow, that's where ultimately us seeing that landlord has that buffer to support them through any difficult periods they might experience. That's where there is an importance there on that. But that's what we've been doing that for as long as I've been at Paragon, nearly 6 years now. So I don't think that's anything new in terms of the way we will do business moving forwards. I think with periodic, I think that you could look at it two ways. It gives the landlord more flexibility for one reason or another, but it equally gives the tenant more flexibility if they were to have a change in circumstances and they were wanting to relocate for a job or partner family reasons, whatever it might be. And equally, I guess from the landlord's perspective, it probably does highlight the importance of them doing the relevant checks to ensure they're happy with their new tenant and with credit checks, etc., to really be confident in what things are going to look like going forwards within reason. So yeah, watch this space, I think.
Thank you. And then the last question is, where do you, Paragon, see the future of the PRS going forwards?
I think the future of the PRS, I think from my own perspective, I think that there undoubtedly are headwinds with increasing legislation and whatnot. But I think that, certainly in my experience working within buy-to-let for the years I have now, I think, headwinds is not anything that we're not used to. I think there have been multiple bumps in the roads over the years. And I think often people talk about the resilience of the buy-to-let market, and I think that's there to be seen. I think if you look at other sort of bumps in the road that we've seen, landlords have always found a way to pivot. If you look at like mortgage interest and finance costs no longer being a relief, that's suddenly driven limited company lending to, I guess, levels we probably never anticipated that were possible, many years ago, to where we are today. So, I think that there are challenges, there are headwinds with the legislation that's there. I think, there's often it's spoken about like this mass exodus. I think that, do we see landlords, and I'm sure you're the same, landlords that, may have been an accidental landlord, perhaps an ex-marital home or a property they may have inherited, they are now at mortgage review periods. They're coming off what is a very lovely 2% rate, and they're being told by Jeni that it's now 4.5%, the bearer of bad news. What was there in terms of profitability may not be there now. Can I understand why they would sell? Well, every day of the week. But I think what's really interesting about the landlords is the way they then pivot and find new solutions to make things work and to make it a viable investment, diversifying their portfolio, selling assets that perhaps aren't performing and finding new ways to make things perform and make things look better and more profitable, whether that be HMOs or multi-unit freehold blocks, semi-commercial. We did a recent study that I think is quite interesting, which was a number of customers we spoke to. We asked them about what their next acquisition is likely to look like. And 79% of those customers said they would be targeting properties in need of some degree of work. 44% leaning towards assets in need of minor refurbishment. So, cosmetic, new kitchen fixtures and fittings, with the remainder targeting assets in need of major refurb. So, maybe a conversion to a large HMO, multi-unit freehold block, semi-commercial into residential, whatever. So I think it's just an example of where, landlords pivot. Landlords find new ways of finding solutions to make things work. You know, with the EPC changes, which we've not even spoken about, EPC changes around the corner. You know, will that potentially drive more landlords to be attracted by the new build market? You know, the low maintenance, the no issues with the EPCs, etc., etc. So, yeah, I think from a lender's perspective, obviously, clearly, I can't talk for anyone or for everyone, I should say. I think it's in a good space. You know, there's a lot of options out there. There's lots of lenders that want to do business, that want to find solutions for customers. There's lots of options, lots of products with various different rates, various different fees, you know, lower rates, higher fees, higher rates, no fees, etc. And I think that you will see lenders continue to innovate, to try and adapt to the market where we need to ensure that we are providing the right product offering, the right proposition to landlords, and assist them with what it is they're trying to do for their business. So I think all in all, I think we're in a good spot.
There you go, Sam Debenham from Paragon Bank. Always interesting to hear from a lender's perspective, both what they're up to, what their view of the market is, and all that kind of thing. And we're going to be running lots more of these, actually. So we're gradually going through and speaking to different lenders to book them in. So do keep your eyes peeled. We'll have lots more Meet the Lenders for you coming up.